Greetings, members, one and all of the Salivation Nation. Gold got a coronavirus spike, a whisker away from $1,800. Let's explore. That's right, I did get over that just slightly. This comes to us from CNBC, routed through Reuters here, and gold bounced back on Tuesday within striking distance of the key $1,800 per ounce support as a sharp jump in COVID-19 cases boosted hopes for more accommodative monetary policy measures and demand for the safe haven metal. And that's just it. These new cases that are popping up in the Sun Belt is a little bit troubling. But one good thing is the death rate is down. At least it is for now. But one concern is the increase in hospitalizations, that death rate may go up in the coming weeks. That's kind of a lagging indicator. And that will bode well for gold and maybe even silver, I believe, in the coming weeks here. So we'll see how that plays out. And it's very unfortunate. I think we're all sick of this virus. Whether or not, no matter what your feelings are about it, obviously it's played up by the media and it's being exploited in all different directions, and it's unfortunate, but we just want this thing to be over with. It's basically consumed the most part of the year now here, and we're ready for it to pass, and when it's done and over with, then I think it's going to be very interesting to see what the metals do, and I think that's part of what the video that I posted earlier today is about. What happens after $1,800 gold? A lot of that may depend on the coronavirus and how it's the caseload is for that particular situation here. But the article goes on here and talks about how spot gold had jumped to $1,796.08 per ounce, a 0.7% increase, and the futures settled at $1,809.90 per ounce, having earlier hit its highest since September of 2011 at $1,810.80. Gold rose to its highest since November 2011 at $1,796.80 an ounce earlier, just a few dollars away from the $1,800 psychological level. Whenever there is fear, that is what is a supporting factor for gold, whether it's the coronavirus or fear of the economy not doing well, said Michael Matosic, head trader at U.S. Global Investors. And that's exactly right. And they're both kind of hand in hand right now in terms of what's going on and what's driving the prices. If your portfolio is underweight gold, and if it looks like gold might continually start to create a new rally, you will want to add to it. Massive stimulus measures to limit the economic damage from the coronavirus pandemic has supported gold, widely viewed as a hedge against inflation and currency debasement. Prices have gained more than 18% so far this year, and it's largely due to this pandemic. But the thing is I want to caution you to not buy it out of fear. Because, again, this is why the prices are high right now. Sooner or later, that fear is going to subside or a new reality is going to set in. President Trump tweeted that, basically we have to live with this, and we have to live with it with an open economy. We just have to be careful. I think, and how will history judge the shutdowns? I don't know. My guess is probably we shouldn't have taken it as far as we did. We should have found some other ways to deal with this. But there's a lot we didn't know about it. And more recent news here is saying that it has spread through particles that actually hang in the air in smaller water particles of viruses, which means that it is potentially more contagious than they had originally thought. So it's there's always new information that's coming in about this, and how that information is trickled out is one thing or another. And with a vaccine coming and the associated issues that are derived around it, that's going to be another situation we have to kind of work through as that becomes a reality here, potentially towards the end of this year or early next year. It's consumed the news cycle for sure. unless there's some sort of protest or rioting or looting going on, then it doesn't consume the news cycle. The surge in U.S. coronavirus cases has made business owners nervous again. Atlanta Federal Reserve Bank President Raphael Bostic said on Tuesday gold staged a comeback, having dropped to a session low of $1,773.37 an ounce earlier. We had early weakness in prices, seen as a buying opportunity by bullish traders, reckoning prices will go higher from here, and we indeed pushed to a new nearly 9-year high in gold futures today, Kidco Metals senior analyst Jim Wyckoff said. Gold and silver traders are also looking further down the road at the inflationary implications of all the central bank measures that have infused cash into the system. Silver rose 0.6% to $18.31 an ounce. So it's moving along with gold, but not to the level that gold is. And there's a frustration. We'll talk about that here momentarily. Palladium actually slid a little bit, while platinum jumped 2.8%, rising to its highest in nearly 1 month earlier. So here we're looking at the precious metal prices right now, as the market is only open for a few minutes longer here as of the recording of this video. We see gold is very, very close to reaching that $1,800 level yet again. It was there earlier today. And silver is marginally up. And, as I have expressed, and some of you have said to be patient a little bit longer, and I may have to be for gold to catch up to, for silver to catch up to gold. But I just worry that every passing day now, and every passing week, that silver does not break out beyond pre-COVID levels by most measures, that it's just going to languish at around the 97, 98 to 105 to 1 gold to silver ratio. We need to see sustained growth in silver to come back to what is considered normal gold to silver ratio. And keep that in mind. It's not about rarity. People have talked about the gold and silver ratio should be at what it comes out of the ground at 9 or 8 to 1. Well, that's just not how it works. Rarity doesn't mean anything. Platinum is 15 times more rare than gold. Though it is much less than gold. Obviously, it is less than half the cost of gold, so rarity doesn't mean anything. But silver does. What's going for silver is the fact that it is a monetary metal, and the fact that it does have a history behind it, and people are accumulating it. There is demand for it, but I think that most of that demand is coming from the SLV, the ETF side, and those people really don't see silver as they don't see it as money or even as a hedge. They see it as an opportunity to kind of diversify their portfolios, which is wise to do. But I think the really way we're going to see silver rise in price and catch up to gold is for it to be treasured like gold is, and it's just not. We need more stackers out there, or more people buying the physical silver. And I think it is a good buying opportunity at this point. But whenever you buy, you have to understand the price could go down. It could go south again. But we'll see. But nonetheless, gold is definitely performing here. But it's operating out of fear. And you have to be careful when it's at these prices doing that, because sooner or later something's going to give, and everything's going to stabilize. And when it does, what's going to happen to gold? People are going to maybe sell off and say, I'm going to buy into some more riskier assets to make money. But that does tend to happen less, because people that are into gold want the stability of what the metal provides much more than silver in regards to stability as that ultimate hedge, that ultimate insurance policy. And that is how I view gold and silver, but especially gold in times like these. And so that's why it's not as volatile. And you pack a lot of value in a small space, and the fact that you can buy the physical metal, even when premiums are high, typically you do better with gold in that regard. But I'm not anti-silver, and I'm not saying, in fact, I just mentioned earlier that we need more silver stackers out there, and and to see what's going to happen. But I think it's only going to take that increase in demand, even more so than what's right now, for it to really break out in terms of the spot price. Because you have the increased premiums that we're finding out right now. You have the separation between spot and premiums, the physical price in terms of buying it and selling it. But it's going to take much more of that in due course for it to catch up. And so there you have it. So there's the news of the day, of the afternoon, with where things are with the price of the metals. And I would like to extend a multitude of gratitude to you all for taking the time to watch, and to encourage you to please rate, share, comment, and subscribe, or resubscribe if you got kicked off. Some people have told me about they're getting kicked off being subscribed. It's not me doing it, it's a YouTube glitch, so resubscribe again.